In just a few short years, we've witnessed the rise of a generation that's challenging every traditional notion about money. From rejecting old-school banks to embracing digital currencies, Generation Z is redefining what it means to manage wealth in the modern world. In today's video, we'll discuss how this young generation is shaking up the financial landscape and the challenges they face along the way. Who is Generation Z? In a world where digital screens dominate every aspect of life, a new generation is emerging with unique characteristics and expectations. Generation Z, born between the late 1990s and early 2010s, represents a substantial shift in how people interact with technology and manage their finances. By 2020, there were already approximately 2.6 billion individuals in this generation, and projections suggest that by 2025, it will account for around 29% of the global population. This generation's relationship with technology is unparalleled. Almost all of them, or 98%, own smartphones, and they spend an average of 10 hours a day engaged with screens. This level of tech immersion influences every aspect of their lives, from social interactions to financial decisions. When it comes to financial matters, Generation Z starts early. Many open their first savings accounts by the age of 10 and begin researching finance by 13. This early engagement is a testament to their practical approach and desire for financial security. Their formative experiences with money management are shaping their future financial behaviors and expectations. Generation Z is not just a large demographic. They are a technologically adept and financially proactive group. Their unique characteristics and habits are setting the stage for how they will influence the world in the years to come. Financial habits of Gen Z. In a world where financial stability feels more elusive than ever, Generation Z is rewriting the rules of personal finance. Their approach to saving and budgeting stands out. A significant portion, around 68%, manage their finances more responsibly compared to older generations. This trend reflects their practical mindset, shaped by growing up during economic uncertainties and observing the financial struggles of previous generations. Many from this group actively set budgets and save diligently, seeking to avoid the financial pitfalls that plagued their predecessors. When it comes to spending, Generation Z is notably discerning. Cost is a primary concern for them, with 72% considering it the most important factor when making a purchase. They have been raised in an era of economic volatility, which has made them more cautious about their expenditures. This focus on cost is not just about saving money, but also about getting the best value for their spending, a habit that often leads them to compare prices and seek discounts. Investment choices also reveal a shift in their financial priorities. While traditional investments like stocks and bonds still hold some appeal, a growing number of Gen Z individuals are turning their attention towards cryptocurrencies. Their interest in digital currencies highlights a preference for high-risk, high-reward opportunities over the more stable but less thrilling traditional investments. This inclination towards cryptocurrencies reflects their comfort with technology and their desire for modern, innovative financial solutions. Generation Z's financial habits are marked by a blend of caution and boldness. Their approach to saving and spending, combined with a keen interest in emerging investment opportunities, sets them apart from previous generations. As they continue to mature, their financial behaviors will likely shape the future of the economy in significant ways. Financial literacy and knowledge gaps. As Generation Z navigates the complex world of personal finance, a troubling reality emerges. Their financial literacy is not as robust as one might expect. Despite their early start in financial management, a significant portion of this generation struggles with basic concepts. For instance, about 50% of them find it challenging to estimate their net worth accurately. Additionally, 40% have never created or adhered to a budget, which are fundamental skills for effective money management. This lack of financial knowledge becomes more apparent when examining specific areas of uncertainty. Many in Generation Z have difficulty understanding essential financial concepts, such as credit scores and inflation. The credit score, a critical factor in securing loans and managing debt, remains a mystery for a large number. Inflation, another crucial concept, affects how the value of their savings changes over time. It remains poorly understood by many. This gap in knowledge could hinder their ability to make informed financial decisions and plan for the future effectively. In their quest for financial education, Generation Z often turns to sources like TikTok and YouTube. While these platforms offer a wealth of information, they also present some challenges. The content found on these sites can be inconsistent in quality and accuracy. Many financial tips and advice shared on social media are not always vetted by experts, leading to potential misinformation. As a result, the very platforms that aim to educate may sometimes contribute to misunderstandings or incomplete knowledge. Although Generation Z is proactive in seeking financial knowledge, significant gaps remain. The challenge lies in bridging these gaps and ensuring that they have access to reliable, comprehensive financial education. Addressing these issues will be crucial for helping them achieve financial stability and independence in the long run. Challenges facing Gen Z. In the fast-paced world of Generation Z, financial challenges loom large. The economic instability that has marked recent years has left a deep impact on this generation. With many facing job uncertainties and fluctuating markets, their financial behavior is shaped by a constant sense of insecurity. This sense of instability is compounded by the pressures of social media, where curated images of success and wealth can create unrealistic expectations and feelings of inadequacy. The competition with peers online fuels a cycle of anxiety and comparison, making financial stability seem even more elusive. Debt and financial insecurity are significant sources of stress for Generation Z. The weight of student loans, credit card balances, and other debts contributes to high levels of financial anxiety. Many are burdened by the fear that they will never be able to achieve the financial security they desire. This stress is not just about the numbers on a balance sheet, but also affects their mental well-being, impacting their overall quality of life. Adding to the complexity, Generation Z often turns to high-risk investments as a way to achieve quick financial gains. Their enthusiasm for cryptocurrencies such as Bitcoin and Ethereum contrasts sharply with traditional savings methods like fixed deposits or bonds. While cryptocurrencies offer the allure of high returns, they also come with significant volatility. This preference for risky investments reflects a broader trend where the desire for immediate financial rewards sometimes outweighs the need for long-term stability. As a result, many are drawn into investments that can lead to substantial financial losses if not managed carefully. Generation Z is navigating a minefield of economic pressures, social media influences, and financial stress. Their approach to money, characterized by a mix of anxiety and a penchant for high-risk investments, highlights the need for better financial education and support. Understanding these challenges is crucial for developing solutions that can help this generation achieve greater financial security and peace of mind. The shift in financial preferences. The financial landscape is undergoing a dramatic shift, driven by Generation Z's distinct preferences. One of the most striking changes is their growing inclination towards cryptocurrencies. Imagine a world where over half of the younger generation would rather receive a portion of their paycheck in digital assets like Bitcoin or Ethereum rather than traditional currency. This is not just a trend, but a clear sign of how deeply ingrained the digital economy has become for them. Unlike older generations who have traditionally relied on banks and credit unions, Gen Z is showing a clear preference for the freedom and potential high returns offered by cryptocurrencies. This shift in financial habits is creating ripples across the financial industry. Traditional banks and financial institutions are finding themselves in a race to adapt. To stay relevant, they must now offer services that cater to the needs of a generation that values digital innovation and decentralization. The rise of fintech companies reflects this change as they provide alternative financial solutions like digital wallets and cryptocurrency trading platforms. Financial institutions are increasingly investing in technology to compete with these new players, aiming to provide seamless, digital-first experiences that align with the preferences of younger consumers. As Generation Z continues to favor digital assets over traditional banking methods, the financial industry must respond or risk being left behind. This evolving landscape highlights a fundamental shift in how money is managed and invested, pushing traditional institutions to rethink their strategies and embrace the digital future. With their unique approach to money and investing, Generation Z is setting new trends and facing unprecedented challenges. How will these changes affect their financial stability and opportunities? Drop a comment with your predictions and experiences, like and subscribe for more content, and tell us what financial topic you'd like us to cover next.